So in this video today, we are going to be talking about whether or not another stock market crash is likely to happen. So the last week in the stock market has been absolutely insane. And just for a quick recap here, guys, on March 12th, the stock market officially entered a bear market, and this happens when a major stock index like the Dow, the S&P 500, or the Nasdaq has a 20% drop from a closing high. And the market didn't just drop 20%, we saw a massive sell-off with the overall stock market, which brought the Dow down to a low close of 18,591.93 cents on Monday of last week. So we entered a bear market, and then the market absolutely tanked. And from the peak to where we were on Monday, the market was officially down 37%. But after that, wait a second, everything changed because the market left bear market territory after a massive 3-day gain of 21.3%. And if you're keeping track here, guys, that is the best 3-day rally of the Dow since 1931. And on that note of the Dow exiting bear market territory, we officially had the shortest bear market in history of just 11 trading days. So is that it? Is it really just an 11-day stock market crash that we saw? Well, I think not. On Friday, after this historical 3-day gain, the market dropped another 4%, which puts us back to 27% below the February high close, and I personally expect more pain to follow. So basically, I'm going to tell you guys why I think the stock market could probably crash again, or at the very least, we are not going to re-enter a bull market immediately. And just so you guys know, this is merely my opinion, and this is not any kind of financial advice. Now, the first reason why I believe this is a false signal is due to the market volatility, and that is essentially the up and down movement of the stock market, because the stock market has officially become more volatile than it ever has been in history. And this is largely due to two different factors. Number one, we are seeing record high participation in the stock market thanks to the array of free trading apps out there and free investing apps. 10 or 20 years ago, it was a lot more difficult to invest in the stock market. You had to pay for an online discount brokerage, or you had to call your stockbroker up on the phone, and you had to invest thousands of dollars in many cases to open up a trading account. Well, now there are countless free investing apps out there that allow you to trade commission free with no minimum account balance. So as a result, the barriers are a lot lower and more people are investing in the stock market. And when you have more people trading stocks, moving in and out of the market, it's inevitable that the market is going to become more volatile and we're going to see greater price swings. And the other factor that comes into play here is something called algorithmic or computer trading, which has had a huge effect on the volatility that we see in the stock market. And one of the interesting things to take a look at is when we are seeing the most drastic price actions taking place. And if you look at the market over the last couple of weeks, most of the drastic price actions are taking place after 3:30 p.m., which is 30 minutes before the stock market closes. And that is evidence of this algorithmic or computer-based trading placing trades late in the day. So now it's not uncommon to see the market moving 2% or more up or down after 3:30 p.m. when the market is coming to a close. And that is largely due to this algorithmic trading placing massive buy and sell orders based on where the market is closing. And so as a result, it is no longer uncommon to see these 5% plus or minus fluctuations in major stock indexes, which is something we've never seen before in normal market conditions. And to be honest with you guys, these price swings remind me of what we saw with Bitcoin back in 2017. And this volatility is certainly not just my opinion, guys. You can literally see it if you look at historical data in the market. For example, if you take a look at this chart here on the largest point gains and point losses of the Dow in history, you will see that of the 10 biggest point gains in history in a single day, 7 of those happened this month. So we've had 7 record-breaking days in 1 month, as far as the largest point gain of the Dow in history. And if we look at the largest point losses in history, of the 10 biggest point losses of the Dow, 8 of them happened this year. So we are seeing all of these crazy price swings as a result of algorithmic trading and record high participation in the stock market. So it is my opinion that this volatility has provided us with a false signal because the stock market officially exited bear market territory last week. But when these 5% price swings or more are becoming a commonplace, we may not be able to rely on this as a signal that the bad times are over. Now, the second reason why I expect the stock market to continue to go down, or at least be extremely volatile going forward, is because the number of cases of the virus have not peaked. And if you look at pandemics over history, in most cases, a stock market rally happens after the pandemic peaks, and we have certainly not reached that point thus far. Last week on Friday, the US became the country with the most cases of this virus out of any country in the world. And if you look at the CDC website, you will see that cases in the US are still growing exponentially, meaning we have definitely not reached the peak yet for this virus. And so far, at least 30 different states have closed all non-essential businesses, and I expect that number to increase over time. Because if we do some basic reasoning here, guys, if cases are still growing exponentially here in the United States, and we're the #1 country for this virus, do you expect more or less businesses to close in the future? And this mass closure of businesses leads us into point number 3, which is unemployment. The more businesses that are mandated to close, the more unemployment is going to rise. And speaking of breaking records, we also broke a massive unemployment record last week. You see, up until last week, the largest jump in unemployment cases in history in a single week was 695,000 back in 1982. Well, we beat that record by a multiple of roughly 4 because last week a record 3.3 million people filed for unemployment. And the scary part is, guys, many analysts and economists believe this is just the tip of the iceberg, as businesses have just began laying off employees and we haven't seen the full effect of this on the economy. And some economists believe that 40 million people will lose their jobs by April, which is astounding, and that is a far cry from just 3.3 million unemployment cases in a given week. Now, nobody knows for certain just how many people are going to be losing their jobs, but if a number like 40 million is being thrown around, then we are clearly at just the tip of the iceberg, and we've already broken a previous record by more than 4 times as far as unemployment goes. And all of this data together is going to paint a picture for the overall economic fallout associated with these business closures and everything going on, and we won't be able to see that until earnings season begins. And if you're not familiar with that, guys, that is when large publicly traded companies begin reporting earnings as they are required to do on a quarterly basis. And earnings season begins the month following the previous quarter, so earnings season for Q1 is going to begin in April. But there's another big problem here, and that is the fact that this quarter is not going to accurately reflect the economic fallout associated with this virus, because for the most part, January and February were not big months in terms of business closures and the overall fallout outside of what was going on in China. So the real pain here is going to be seen in Q2, which is April to June, and those earnings reports don't start coming out until July. So I expect to see some bad numbers coming out next month in April, but even worse numbers to follow in July. Now, many companies have already retracted their guidance numbers or their estimates for future earnings and numbers like that based on this event that happened, but there's a massive unknown here as far as how much some of these companies have lost in revenue and profits associated with this virus. we have no idea how many people are truly going to lose their jobs and file for unemployment. We don't know how many are going to be hired back. We have no idea when the virus is going to peak. It certainly hasn't already. And we have no idea how this is going to truly affect companies until we see Q2 earnings in July of 2020. So based on that, I believe we saw a false signal of this bear market ending, and I think there is more pain and more volatility to follow. But anyways, guys, like I said in the beginning, this is just one random person here who dabbles in the stock market, sharing his opinion about what is going on. And I would love to hear what you think about this down in the comment section below, whether you agree with me, disagree, or somewhere in between. And real quick, guys, I just want to give a quick shout out to Unemployable for sending me this really cool canvas. I'm going to hang it up somewhere here in my office. If you guys want to check out their Canvas website where you can get motivational prints like this, there's going to be a link for that down in the description below. But thanks so much for watching this video, guys. I hope you enjoyed it. If you made it to the end of the video, go ahead and drop a like for the YouTube algorithm. That always helps out and allows this video to be shared with more people. Make sure you subscribe to be notified of any future uploads and hit that bell so you don't miss out. And I will hopefully see you guys in the next video.